Thank you, Justin, for talking to Real Asset Media. You have recently released a report on the impact of COVID-19 on the real estate sector. So what do you think are the likely scenarios in terms of financing and valuations?
I think it's difficult at the moment. I think what we saw both internally within AXA IM Real Assets, and I think what a lot of the other alternate lenders and also the banks, was immediately in the aftermath of COVID-19, the starting point was making sure that our employees were safe. We ensured business continuity procedures were put into place, and we could get back to some level of business continuity. After which, we started looking internally to understand what's happening within the portfolios that we manage. And only now are we starting to look outside for potential new investment opportunities. And there aren't many deals either on the equity or debt side of the capital stack that are being priced in a post-COVID-19 world. So I think it remains to be seen what the ultimate level of pricing will be. I think what's critical and paramount is to ensure that we do have some level of credit market fluidity and availability of finance. Real estate is a very capital-intensive asset class, and having the availability of the debt portion of the capital stack in some capacity is going to be critical to maintaining a fluid equity transactional market. But it remains too early to tell what the ultimate impact is likely to be. The best we can see at the moment is the fact that the increased cost of the bank financing, or the cost of capital for the banks, is up roughly 50 to 100 basis points. We've seen a bit of a counterbalance to that, knowing that the reference rates have all seen a decline in this renewed lower for longer environment on the back of the quantitative easing measures and reduction in monetary policy pressures and the cut in interest rates. I think what's next to be critical to assess is what is the view of the asset class, what is the underlying credit quality, and I think that's where some of the disparity by property market sectors is likely to emerge and lead to a bit of a divergence in pricing, given the differing prospects for those sectors that we just mentioned, for example, multifamily and logistics versus hospitality and retail or leisure.
Justin, thank you very much for sharing your insights.
My pleasure. Thank you.